Now, if you start to get geopolitical events as you're describing popping up all around the world and not going away, but simply getting worse, then perhaps that impact will be a little bit longer. But to me, that's not the reason to buy precious metals unless
Right.
you live in one of those war-torn countries.
Right.
Then, of course, it's a very, very powerful reason to buy. But that's not the reason to buy. The reason is fiscal, financial, and monetary instability. Why gold? Why monetary metals move up in the first place? But by the end of the year, I mean, I'm thinking gold has to be higher. Even 3,000's in sight. That's a little aggressive, perhaps, for the end of the year, but I think gold's definitely going to be high.
Enthusiasm for gold surged on Tuesday as the precious metal reached a new record high of $2,773, up from the day's support at $2,740. Gold's strong close in the top third of the day's price range highlights bullish momentum, setting the stage for a potential rally toward the next target zone, though this will hinge on continued price strength. Adrian Day, a prominent investment strategist and founder of Adrian Day Asset Management, points out that while brief pullbacks due to profit-taking or news events are possible, sentiment remains robust, with some analysts projecting gold could approach the ambitious $3,000 mark by year-end. Several factors, including geopolitical uncertainty and the anticipation of a U.S. Federal Reserve interest rate cut, influence this recent spike in gold prices. Political tension surrounding the U.S. presidential race, alongside the escalating Middle East conflict, has bolstered gold's safe haven appeal. Adding to the mix is a heightened sense of economic risk after Japan's latest election results, contributing to global investor caution. Day notes that geopolitical crises can drive short-term interest in gold, yet sustained global tensions may support gold and silver prices over the longer term. However, most experts view financial and monetary instability as the primary motivator for precious metals investments. Historically, gold has performed well in low interest rate environments, often as a hedge against broader market volatility. Supporting this trend, gold prices have already surged over 34% this year. According to Peter Grant, senior metals strategist at Zaner Metals, safe haven demand remains robust amid ongoing political and economic uncertainty. Reports from Gaza regarding casualties from recent airstrikes underscore the backdrop of geopolitical tension influencing market sentiment. With uncertainty on multiple fronts, gold remains a focal point for investors seeking stability in turbulent times. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Like a lot of people, I've got to think we're going to have a pullback at some point. I
Right.
mean, that's just normal for markets. What's remarkable, over the last month, too, and the last week, every pullback is immediately reversed. Gold is really resistant. And sometimes it's Asia down, but Europe up. Sometimes it's Asia up, Europe down, America up. There's no particular pattern to it. But gold is very, very resilient. Every time it drops, buying comes in. I think there has to be a pullback at some point, and that could come on any kind of news
Right.
that would just trigger profit taking. But by the end of the year, I mean, I'm thinking gold has to be higher. Even 3,000's in sight. That's a little aggressive, perhaps, for the end of the year, but I think gold's definitely going to be high. Well, we had the one cut in the US. We had the one cut of 50 basis points. Canada, of course, has cut rates a few times. But it's just a beginning, right? We're at the beginning of a rate cutting cycle, absolutely. And the important thing to realize is we're at the beginning of a rate cutting cycle before inflation has been properly
Acknowledged.
controlled, killed, whatever word you want to use.
Right.
And even though, and this is exactly what happened, in the late 1970s with Arthur Burns, even though Jerome Powell keeps, it's said he goes around the office saying he doesn't want to be remembered as another Arthur Burns. But we forget Arthur Burns was raising rates for
Right.
years, but he was always lagging inflation. And it
Right.
was only when Volcker came in and got ahead of inflation, but we controlled inflation or killed inflation. And that's really what's been happening here. So, inflation's still stubborn, rates coming down. That spells stagflation to me. It's we don't get the central bank numbers, day by day or week by week.
Right.
I suspect there's ongoing central bank buying. It would be surprising if there were not. There's definitely ongoing buying in China, and there's an increase in buying, excuse me, an increase in buying from the West, both in gold and silver, and the precious metal stocks as well.
Right.
If you look back at September, even in September, when gold and silver were at highs then, right? They were moving up, they were at highs. Most gold funds, most precious metal funds still had net outflows for the month of September, which is quite astonishing, really. Now, I suspect that when we see October's numbers, that will have reversed. But there's definitely no flood of money pouring in. And from a contrarian point of view, you know, that's a positive. It means there's a lot of people still to buy. Sure, look, there's no question that political instability, let's call it that, or geopolitical instability, is a supportive factor for precious metals rather than a negative factor.
Right.
But as you said, they tend to be, geopolitical events tend to be short-lived. Now, if you start to get geopolitical events, as you're describing, popping up all around the world and not going away, but simply getting worse, then perhaps that impact will be a little bit longer. But to me, that's not the reason to buy precious metals, unless you live in one of those war-torn countries. Then, of course, it's a very, very powerful reason to buy. But that's not the reason to buy. The reason is fiscal, financial, and monetary instability, which is why monetary metals move up in the first place.
Silver prices fell on Wednesday, trading at $34.20 per troy ounce, down 0.75% from Tuesday's price of $34.46, according to FX Street data. Despite this slight dip, silver has risen an impressive 43.72% since the start of the year, showcasing a sharp upward trend driven by economic and industrial factors. Investment strategist Adrian Day explains that silver's price movements have historically exhibited more leverage and volatility than gold. This heightened volatility is partly due to silver's smaller market size, which makes it susceptible to sharper fluctuations. Industrial demand, particularly from the renewable energy sector, plays a significant role in silver's recent performance. Solar energy production is a major contributor to this demand, as silver is a critical component in solar panel manufacturing. Industry analysts project that by 2025, silver demand from the solar sector alone could reach 8,000 metric tons annually. This growing industrial use adds another layer to silver's appeal, intensifying interest from investors and manufacturers as the market looks ahead. With silver's distinctive volatility and expanding industrial applications, its role as both an investment and a critical industrial metal remains robust and dynamic. Let's get back to the interview.
Yeah, I suspect so. I mean, silver's always, it has more leverage than gold, and it always, and traditionally it's been more volatile than gold as it moves up. So I think there's no particular reason I can think of that will change.
Right.
Obviously, the industrial demand has become even more powerful in the last couple of years, with solar panels in particular. And I don't think that's going away. I mean, I'm not a big sort of ESG guy, and I'm not a big renewables guy. And, to me, wind farms despoil the countryside and kill a bunch of birds and fish. I don't think they're particularly environmentally friendly.
Right.
But in addition to that, of course, you need places where the wind blows. Similarly with solar, you need places where the sun shines. But the truth is, there's a lot of parts of the world that could really boost their power reliability by installing more solar panels. So I think that's only going to continue. And as they get cheaper and more efficient, the efficiency is important because, in the past you had to replace the solar panels fairly frequently.
Right.
And now, the length of time that they last and are reliable is getting extended. So from a one user point of view, that means less silver, right? Because you don't have to replace it so quickly.
Right.
But from an overall global perspective, it means they become cheaper and more economic for more and more people to use. So yeah, that's very powerful.
Absolutely.
But yeah, to answer your question, I see no reason. Silver's a much smaller market than gold. There's no reason to think it won't continue to be volatile as it moves up. What's concerning me? What's concerning me is that we haven't had a pullback yet.
Yeah,
Because,
that's worrying.
yeah, I mean, markets should have pullbacks. You know, that's just normal. So, I mean, we're going to get one at some point. And it'll come from some piece of news, who knows what. It might be the Fed skips cutting rates 1 month, you know, and that sort of freaks people out. But what will cause the metals to correct is just the fact that we've had such strong runs. You know, I don't see any fundamental news that is going to fundamentally change the positive outlook for gold and silver. You know, is the US suddenly going to say, you know, quit this weaponization of the dollar? You can go ahead and sell the dollar in your reserves if you like. Don't worry about it. You can set up an alternate payment system. Don't worry. That's not going to happen.
That's not going to happen.
Is US and Europe and Britain suddenly going to become fiscally responsible and cut their debt? Okay, no. So I don't see any fundamental thing that is going to change the favorable outlook. It's only going to be a short-term correction.
Gold's resilience amidst geopolitical and economic uncertainties underscores its value as a safe haven asset, drawing individual and institutional interest as it approaches historic highs. Meanwhile, silver's dual role as both an investment and industrial metal, especially with growing demand from the renewable energy sector, further solidifies its unique position in the market. As global dynamics continue to shift, the appeal of precious metals remains strong, offering investors a buffer against volatility and potential financial instability. With the current economic and political landscape, how do you foresee the roles of gold and silver evolving in diversified investment portfolios? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.